Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but more specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to show you one example of a morning gap trade from this morning that worked out picture perfect. Before we do that, let's go ahead and explain exactly what this gap trading strategy is all about. As day traders, we need opportunity. In order to get opportunity, we need stocks to be moving at the opening bell. When stocks are moving at the opening bell, it creates opportunity for day traders, but more importantly, it creates opportunity for traders that can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. So what I do is teach a course where traders learn everything they need to know in order to trade the gaps successfully. Which stocks does this work the best with? What are the other criteria we're looking for, such as what type of volume do we look for? How much of a gap higher or lower do we look for? How do you trade the specific stocks that are gapping down or gapping up at the open? How do you calculate a specific price target? How do you calculate a specific stop loss limitation? And most importantly, and here's the holy grail, how do you calculate the specific price levels where these stocks will first be drawn to like a magnet and then have that price reaction from in the other direction? All these things and a whole lot more are taught in the course at LazyGapTrader.com. Now, the other thing I do is give traders that want them an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. Here's a copy of the email that went out to my traders this morning. As you can see, it arrived in the inbox at 9 a.m. Eastern Standard Time. Now this morning, we had 7 potential morning gap trades on the board. Keep in mind, they're not all going to hit their specific price levels. What we want to do is give the trades or give the stocks an opportunity to get to our specific price targets that we learn how to calculate in the course. Those are the highest probability trades. Sometimes we get 1, sometimes we get 2 or 3, sometimes we even get more. This morning, or at least thus far today, so far, one of these stocks hit our specific price target. We're going to take a look at Momo, ticker MOMO. Gap lower, support levels are $50.26, and then I gave a secondary level at $46.28. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. I'm going to explain more about how that works when we get back to the chart. The other thing I want to mention is when I give more than one price target on a stock, that's an indication that these are separate and independent trades from one another. So we would be expecting each of these price targets to produce a profitable trade. In this example, 50.26 is trade number 1, and if the stock did continue lower after the fact, 46.28 would be another opportunity for another trade. There are plenty of times that we get multiple trades out of the same stock in the same day. It happens more than you would think. So now we're back on the chart of Momo, and you already had a sneak peek, but let's explain exactly what happened. So yesterday, the stock closed all the way up at $53.14. The stock was getting hit pretty hard at the open along with the rest of the market, and you can see what happened. The stock came into the $50.26 level. It spiked through it by just a little bit, making a low of $49.80. That's within the stop loss limitation, and you can see what happened. The stock took a rocket ride higher out of that level, and within minutes was already up at a price of $51.77. That's a tremendous gain off the level given out to traders at 9 o'clock a.m. 30 minutes before the opening bell even rang. That gain represents $1.51 or 3% gain in just a matter of minutes off that price level. Now, where does the minimum profit target come in? Well, in the course, there's an entire video module where traders learn how to take advantage of the minimum bounce off the 5026 level, book some profit, and let the rest go, trying to get as much of the profit as we can out of these trades. What we're learning how to do is turn these trades into risk-free, emotionless trades, and that's exactly what happened today with Momo. Folks, this is a tremendous strategy that you can use each and every day for the remainder of your trading career. We do this each and every day, and if you want to learn how to do this successfully, then please come over to check out the course at lazygaptrader.com. You'll learn more about the strategy, and then you can learn how to do this each and every day for the remainder of your trading career. One last thing before we give this video a wrap. And here's the holy grail, or the second holy grail. Traders learn the why behind this strategy. Once traders understand why this works, they gain an entirely different understanding of where certain support or resistance levels in the market or on specific stocks come from. Once you understand the why behind this strategy, it gives you an entirely different confidence level when entering trades because you have a certain expectation of what's supposed to happen at these price levels. It takes a lot of the guesswork away from trading. So when you add confidence because of an understanding of why certain things happen, why certain price levels are important to certain stocks, it changes your approach to trading on each and every trade every single day. Come over to check out the course at Lazy Gap Trader. Learn everything you need to know in order to trade this strategy successfully. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.